Hey there, savvy investors. Welcome to today's video where we're demystifying the world of 1031 exchanges. We're going to take you through it step by step, so by the end, you'll be a 1031 exchange pro. What exactly is a 1031 exchange? Well, it's a powerful tax deferral strategy that allows you to sell one investment property and buy another without incurring immediate capital gains taxes. Essentially, it's a way to keep more of your money working for you. The first step in a 1031 exchange is owning an investment property that you're looking to sell. This property is often referred to as the relinquished property. Now, you'll need to identify a replacement property. This is the property you'll purchase with the proceeds from the sale of your relinquished property. You have 45 days to identify potential replacement properties, and there are rules about what you can and cannot identify, so it's important to understand these guidelines. Once you've identified a replacement property, you'll enter into a purchase agreement, just like any other real estate transaction. The key here is to ensure that the contract specifies that it's part of a 1031 exchange. Now let's talk about the timing. From the day you close on the relinquished property, you have 180 days to close on the replacement property. That might seem like plenty of time, but in the world of real estate, time flies, so planning and execution are crucial. One important rule to keep in mind is that the purchase price of the replacement property must be equal to or greater than the net sales price of the relinquished property. If you want to defer all your capital gains tax, you'll need to reinvest the entire sales proceeds into the replacement property. It's also important to work with a qualified intermediary. This is a neutral third party that facilitates the exchange. They'll hold on to the sale proceeds from the relinquished property and ensure everything is done according to IRS regulations. Alright, now you might be wondering, why should you consider a 1031 exchange? Well, the most significant advantage is tax deferral. By deferring your capital gains taxes, you have more money to reinvest in a new property, potentially increasing your overall return on investment. But there's more to it. A 1031 exchange provides you with the flexibility to diversify your portfolio. You can sell one type of investment property and acquire another that better aligns with your current investment goals. And let's not forget about estate planning. A well-executed 1031 exchange can help preserve your wealth for future generations, as the tax liability is deferred until the property is eventually sold without a 1031 exchange. Now, before we move forward, let's take a quick break. If you're considering selling your property, we have a special offer for you. Check out our We Buy Houses program. It's a hassle-free way to sell your property without the traditional selling process. Reach out to us for a no-obligation cash offer and experience a seamless sale. The key to a successful 1031 exchange is careful planning and execution. Ensure you meet all the IRS requirements, work with qualified professionals, and have a solid strategy in place. In the second half of this video, we'll delve even deeper into 1031 exchanges. We'll explore common pitfalls to avoid, strategies for identifying replacement properties, and real-world success stories. Now let's talk about common pitfalls to avoid. One of the biggest mistakes investors make is missing crucial deadlines. Remember, you have 45 days to identify potential replacement properties and 180 days to close on them. Time management is essential. Another pitfall is not properly identifying replacement properties. There are strict rules about what you can and cannot identify, so ensure you understand the IRS guidelines or work with a professional who does. When it comes to financing, be prepared. Sometimes securing financing for your replacement property can be challenging. It's a good idea to have financing options lined up in advance to avoid any last-minute issues. Here's a savvy strategy for identifying replacement properties. Consider working with a real estate agent who specializes in 1031 exchanges. They have experience helping investors like you find suitable replacement properties that meet IRS guidelines. Now let's explore real-world success stories. Many investors have used 1031 exchanges to grow their portfolios and defer taxes successfully. Imagine selling a property, deferring the capital gains tax, and using those funds to acquire a larger and more lucrative investment. It's the kind of strategy that can take your investment game to the next level. But remember, success in a 1031 exchange requires careful planning, thorough understanding of the rules, and working with experienced professionals. It's not a one-size-fits-all strategy, so tailor it to your specific investment goals. A 1031 exchange is a powerful tool in the savvy investor's toolbox. It can help you defer capital gains taxes, diversify your portfolio, and preserve your wealth for future generations. But it's not without its complexities and potential pitfalls, so be sure to educate yourself and seek professional guidance. We hope this comprehensive guide has shed light on the world of 1031 exchanges. If you found this video informative, give it a thumbs up, share it with fellow investors, and don't forget to subscribe to our channel for more valuable insights. Thank you for joining us on this journey to demystify 1031 exchanges. Stay tuned for more tips and strategies in the world of real estate investing. See you in the next video.